Today I'm going to draw candles and show you exactly how structure flows and tells a story in the market. Watch carefully, you'll see it clearly, step by step, in a way that makes sense and makes structure simple. To start, we're going to look at today is a bullish and a bearish swing in the market. Exactly how you will apply this market structure so you can identify that trading range. This will help for later on as we go through how to read the story of price when we combine those swings into the market together. If you've ever wanted to read structure with complete clarity, this is the same method we use in my 90-day program. Let's go through it step by step. So to start with, we're going to look at the bullish swing in the market, and then we'll go over to the bearish swing in the market. Now, there is an actual step-by-step process we have to apply here to understand your current range in the market. So let's start with a bullish market. We have here to start with is we create this low here in the market. The market runs up and we have a break of structure here. So this is a bullish break of structure. Now, to start, you must understand for a valid structure break using this type of structure, you have to see a body candle close. So you wait for this candle to close and then it's closed with a body candle like this. It's a valid break of structure. If it's only a wick through like this in the market, it's not valid for a break of structure in this instance. So let's just take all this off again. Now what we're looking for is once we see this valid break of structure here on this candle, we look back and we're looking for the last time we see a close down. So this candle closes down below the low of the previous candle. Once you identify that, we can mark off this as a valid low in the uptrend. So we have a bullish market now to the upside where we see the valid break of structure. At some point, this would have been a valid high. Now later on, when we go through the story of price and how you'll read this, it will help you understand how this structure moves. So the same process we're looking for. Once we have that break of structure, we're looking for a valid low and a valid high, which creates that trading range we're going to be looking to take trades within. Now we're looking for the same pattern. We're looking for the close down to create a valid high. So this is now our bullish swing, and we now have got a valid high and a valid low in that trading range. Now this is the most simplest format I'm showing you here right now with these candles. Now it's not going to look like this on a real price chart. Now you're going to find many up and down candles within a range. You're going to find internal liquidity based on swing points inside that trading range and potentially imbalances. But this is to teach you really the concept of a simple bullish swing and how we look for this in a market. So there's our break of structure. This becomes our valid low. So let's just make this a low in the market. So this becomes a valid low. Let's make that we're going to make that solid as well. So that's a valid low. This becomes your valid high. And what this becomes now is our current range. So we have a range from this high to this low. And what we expect to see now is the market to pull back inside this range to look for a new buy to break structure once again. Now price can reverse here quite easily and show you a full reversal, and we'll go through that later where we start reading the story of price. This is a simple bullish range. So you have your bullish swing to the upside. We create our valid high and low. This is your bullish range, and it's important every time you look at a chart, find that current range you're trading within. So what you're going to look at potentially is multiple time frames. You'll start with a daily time frame here. You'll move down to a 4-hour time frame, and then you can move down to a 30-minute time frame. Once you have your multiple time frames with your swings and you start to mark out those trading ranges, this is how you can start to find highly probability trade entries. Now today's not talking about entries, it's talking about reading the candlesticks on the chart, the story of price and that market structure. And the key point here is for you to understand, once you create this trading range from this high to this low, that is where you're going to start to look for continuations with the bullish market. So that is the bullish move. Let's now look at the bearish market. Again, we're looking at the same thing. we're creating this current high in the market. We look for a close through this structure. We get a close through on this candle, and we only just closed through the level. Now, I did this to show you that we don't always see a strong bullish close or bearish close like this. Sometimes we get a very small close through the level. It doesn't matter by a pip or by 10 pips, 50 pips, whatever the close does. It's a valid break of structure as soon as we see a body candle close through the level. So this is valid for a breakthrough here. As soon as you see this breakthrough, that is when we're going to start to apply the trading range in that bearish swing. And we look back and we're going to look for where we see the last close up this time. So where we were looking for that close down, for that bullish swing in the market, on a bearish swing, we look for the last close up here. So you're looking for that bullish candle to close above the previous candle's high to create a valid high in the market. And that is once you see that close down on this bearish swing. So let me just take all this off, and we'll now mark off this as a valid high. So this becomes our valid high in the market as the bearish high. And when we're looking for the low to form to create that trading range, and it's going to be a bearish trading range, we're going to be looking for, again, from this high to the low being created is down here. You're looking for the bullish close again, just like we see here. We get that valid close to the upside. As soon as you see that close to the upside from the lowest point of that range, you can mark out this as a low, and that creates your current low in the market. So now you have your valid low, your high. That's going to give you your current trading range, where you can look for the pullback to sell the market for continuation to run the low. Now, there is something we class here as a strong high and a weak low in the bearish market, and we look at a current weak high and a strong low when we're in a bullish market. Now, most of this you can actually learn in more depth going through the 90-day program, and we are actually opening a few more spots come the 1st of September. So if you're interested in that, do check it out. There's a link in the description of this video. So that is a bullish and a bearish swing. Very simple. That is the way we're going to look at marking out your structure to find the valid trading range you're within, to find your valid high, your valid low, and your break of structure. Now, this will continue with the same process over and over with multiple time frames. So what we're going to do in the next part of this video, I'm going to link together some price so we can actually do a full walkthrough reading the story of price so you can see how this is going to work. Now we take it to the next level. You've understood just a simple swing move in the market with a bullish or bearish and how you look to find that trading range. Now I'm going to show you how to read the story of price, where understanding the structure in the market, this is on one single time frame, but it's going to help you to understand applying this across multiple time frames. And if you look at this in front of you right now, you'll see that this is more how price can actually look on the price chart, not a simple straight up and down move. You're never going to see that. And this will hopefully help you to start recognizing where potentially you may be marking that structure incorrectly and how you should be marking it up. So we're going to go from this previous high over here and work our way through to the current move, so you can see exactly how you should be looking at the structure and reading that story of price. We're going to add all our structure points in the market, and we're also going to look at areas of potential imbalance and supply and demand here, so you can see how you would actually learn this inside that 90-day program. So to start with, we're going to mark off this as a high in the market, where we're going to see our first break of structure. So we're going to expect this to be a break to the upside. We're then going to mark this off as our low, where we see a current low in the market, and we'll mark this out as a low. And this is going to be where we see our low. Why? Because once we saw this close through with a body candle close that level, we see this is our last close down right here. Close the downside, this becomes a valid low for the start of our trading range. So this scenario I'm going to show you now is actually going to be a great one to understand where we're seeing just a wick through. So once we see this closing down, let me just show you again, we just closed down this time below the low of that previous candle's low. and it's a valid high we can mark. So we can mark out a valid high here. We just mark that out as a high. So now we have a valid high. What's actually happening here is we pull back into an area here of imbalance. So the market comes back into this imbalance. We push back for this high, but we only wick through. If this was a full body candle close through that level, then that's a continuation with the bullish market. But this doesn't happen. Many of you may be still looking at a wick break as a break of structure. Stop doing that when you're looking at the simple market structure. Yes, we can look at using wick breaks when we're looking at a fractal structure, but that is something completely separate to the standard smart money structure I'm teaching in this channel. So once you identify here that we get this wick to the upside, we wait. We have to see the next candle pushing up and closing above this level for valid breakout to then see the continuation, potential pullback continuation with that structure. What actually happens is we actually continue to push down. So what we actually do now is we'll map out this previous low and this high, so you can see where we are in this range. Price is within this range low to this range high. This does not become a new high. It simply shows me where we had a liquidity grab pushing through this range high, and this is an external liquidity grab here. We then continue to push down, taking out this previous low, pull back again, fail to continue to run higher once again, and then we have a valid reversal. So we've gone from a bullish market inside this current range to now shifting bearish, closing down, reversing structure into that bearish market. So once you've identified this, what we can now turn this into, and let me actually just remove this away, we'll add a new level. This is now reading the story of price. So we've now gone from that bullish market into a bearish market. Once we see this candle closing down, we now look for what we class as a strong high in the market. And again, we reverse. We're not looking for the close down here now. We're looking for the close up. There's our last close up. If this wasn't a close up, let's say we had a wick up here like this, then this would have been the last close up, and that becomes the high in the market. But as this is our last close up, then this becomes your valid high to mark. So that's our current valid high. Once we see the close up again, which happens right there, there's your close up, this becomes your valid low. So we can mark that out as the valid low. And once you start to see how this works, reading the story of price is very easy with this structure. Now we can also mark out here an area of potential supply. This is an area of supply where price is going to pull back into, where we look for continuation. But before we get to that area, look what happens. This is a valid low marked because we have the close up. The very next candle runs the low, taking that external liquidity to allow this market to pull back towards that area of supply within this high to this low of the trading range. So when you start to read the story of price here, you can start to see how the market has to push lower to take liquidity below this low. Now, the reason why there's liquidity there is because we had buyers step in here in the market. They've placed their stops at the low. We have a push down to take all those stops out to pick up liquidity so the market can run back higher for the next area. Now, what we actually have here, you just take this off, is an area of imbalance here in the market, which pushes up to fully fill that imbalance here and goes into this area of supply. Now, more of this will be easy to see on an actual live price chart, but today I want to show you the full step-by-step process of how you actually read the story of price. So once we come into this area, we hold at the area of supply and we never close through. We only wicked up into that zone. Now we look for continuation with the trend to stay bearish. And again, we're not using this as a low for a breakout. We're using this low still. This was just showing us it's a liquidity grab in the market. That's the key point with this structure. So once we now have a new valid break of structure again, let's mark that off, and you start to see the story of price here. So now we have another break of structure to the downside. So we've gone from a bullish to a bearish bias, a continuation to the downside, and now we can mark off this as our high. Why is this going to be our valid high? Well, again, we look back after the valid close through this level. There's our last close up. That becomes a valid high. And once we see this close up, that becomes our valid low. So now we can mark this out as our valid low. So we have our valid low created here. And again, we pull back into our area of supply. So the market once again pulls back into that supply like we did before, and we have a reaction, and then we close through to downside. So we have another break of structure. So you can start to see how the market remains bearish now. And it's not until we see this breakout, again, we close down, we create a new high we can mark off here. So this becomes your new high. And once we see it close up, which does not occur this time until this move closes above this candle. So let me just show you. Once we see it close above here on this bullish candle, we can mark this as a low. And that's how you start to read the story of price here. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. So now we can mark this out as a valid low. Let's mark that out as a valid low. Now we have our trading range. We are still bearish at this point from this high to low. But previously we saw areas of imbalances left behind. This time we don't have that imbalance. No imbalance. So what we expect to see is a straight reversal of external liquidity, which sits above this high. So that's why we see price running straight up to take this high, taking external liquidity, where previously on these pullbacks we saw price filling the imbalance into supply, filling the imbalance into supply. Now we have no imbalance. We expect the high to be run for liquidity. So that's how you start to read the story of price. Now, once we get here, this is only a sweep, and we could have seen a continuation to run low again. But what actually happens, we pull back. Yes, we do close down here, but that means nothing. We're not going to create a new high or anything like that. Why? Because we never created an actual close at this level. That isn't valid until we finally see a close through head to the upside. Once you identify this candle closing through, then we see a shift in structure. So let me just remove this and we'll add a new break of structure there. So this becomes a bullish reversal. So we actually went from bullish to bearish, 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 and now we sweep that high, and that could have continued bearish, but we actually just run bullish. And what's actually happening again, let me get my drawing tool, is right here, we had an area of imbalance. Price pushed up, came back, held at that imbalance, and then we pushed through. Structure now reverses bullish. We have a new low in the market. So I'll go through now and I'll show you exactly how this works. Once we see this candle closing up, this closed down below this candle's low, that means that becomes your valid low in this new trading range. So I can mark this out now as a valid low right here. We'll take the high away because the last break of structure, this becomes my current low. So now you can see how the market dynamics changes. We have a break to the upside. We come back inside, okay, this area of imbalance, let's say. We run up, we take the external liquidity there. We come back, we take the low, we try to run up again, we fail, and then we reverse to the downside. Once you start to read the story of price, mapping up your charts with this structure is going to be a doddle for you. We come down, we create this low because we see a close up. After the breakout, there's our last close up. That becomes our trading range high. That's our area of supply. There's our area of imbalance in between. We pull back after we take out the low for liquidity. We come back, we fully fill the imbalance, and we pop into the area of supply. Now we see a continuation down to run structure bearish once again, leaving a new area of supply and a small area of imbalance where price pulls back into once again. Now, once we see that close of that structure, this becomes our new high. Let me just remove some of this again. That's because we see the close up. So this is a valid high, which creates the area of supply and that imbalance left over. Once we see the close up again, that becomes your valid low. We pull back into filling that imbalance into our supply and a new break of structure to the downside. Now, just again, once we see this break of structure to the downside, we look back. There's our last close up, becomes a valid high, and we don't have a valid low until either this candle closes or this one closes up to create this is a valid low. We only take external liquidity. From this point, we could continue bearish, but we make a higher low, and then we have a break to the upside. That is how you read the story of price. And you're going to find when you go to your price chart now and start looking at these candles, applying it this way is going to help you to master reading markets. Now you have a good idea of exactly how this structure does work. Check out this video where I went through the US dollar CAD, showing you exactly how you can look to find entries on a 30-minute time frame, going through multiple time frames.